Today we're going to learn about income tax.
So what we're going to do in this video is we're going to learn a little bit about income taxes. I've set up a spreadsheet off camera, and my goal is to show you how to build a spreadsheet like this for yourself. And here's the basic setup. This right here is the tax rate, right? Based on our 2018 federal income tax brackets. These numbers here are those tax brackets for a single individual and for a married couple filing jointly. There are other ways to file. There's a single head of household, for example, that you could also do. It'd be just a simple matter of making another column here, inserting a column at column D to add that other set of tax brackets. And here's the rundown. We have an individual whose taxable income is $82,500. What do we mean by taxable income? We mean your income minus any of your deductions. So this does not take into account your tax deductions. The tax deductions are the actual complicated parts about income tax, and it would take more than just this video to go over all the various types of tax deductions. For example, there's this thing called the standard deduction, and honestly, for most people, unless they're doing something interesting, the standard deduction does the trick. There's deductions for charitable giving, there's deductions for interest income, there's mountains of tax deductions. So what tax deductions do is they lower your taxable income. So if we're talking about a small business owner and they depreciate their assets, that will lower their taxable income. That's what we mean by a tax deduction. That's opposed to a thing called a tax credit. A tax credit actually reduces the amount of tax you pay directly after you take into account deductions and then calculate all of your tax. Let me talk to you about how this works and how the income tax system in the U.S. works. First of all, it's what we call a marginal system, meaning whatever rate you're paying, your highest tax bracket that you're in, you only pay that on extra money that you make. It's a marginal tax system. And the other thing is that as you make more money, the tax rates go up. And so the wealthier pay a larger percentage of their taxes, or of their income in taxes. I want to say that again because we always like to claim the rich are somehow getting away with things. But this is pretty straightforward from the 28 federal income tax brackets. As your taxable income goes up, wealthy people have more tax breaks, right? We get that. But as your taxable income goes up, you're going to end up with more tax, a higher percentage tax rate. So that's a thing to always consider. So here's how this works. This individual right here has a taxable income of $82,500. They're doing very well. Good for them. A single person with no, not a head of household, not married filing jointly, a single person making $82,500 after they take their tax deductions. On the first $9,525 that this single individual makes, they will pay a 10% tax. So that first $9,525, roughly $10,000, they pay $952.50 of tax on that first amount. Then on everything between $9,525 up to $38,700, they're going to pay 12%. So 12% on the difference between these two numbers here, $9,525 to $38,700. And so this spreadsheet is designed to simply check and see if your taxable income is below the tax bracket you're in or above the tax bracket that you're in, and then subtract these two numbers if your taxable income is above this particular tax bracket, multiply the result by our 12%, and what we find out is that for the money between $9,525 and $38,700, this individual pays $3,500 and some change in taxes. But this individual did better than $38,700, well over twice that amount, and they're making exactly $82,500. So here's what happens. Everything from $38,700 to $82,500, the individual pays 22%. So the marginal tax rate on everything between $38,700 and $82,500 is 22%. So for this individual, making an extra dollar or making one less dollar changes their tax burden by 22 cents on that dollar. If this individual were to have made extra money, if they were to have made $82,501, that extra dollar that they earned, they would pay a 24% tax on it. So if their taxable income goes up by $1, in this case right here, because they're right on the threshold, it's going to kick them into the next tax bracket and they're going to pay 24%. So I'm going to add $82,500. I'm going to put a 1 in there, and we're going to see the next spreadsheet row is going to pop up. and it's going to be 24 cents. And this individual's total tax burden just went up by 24 cents. So now, because this person has popped into that next tax bracket, they're getting taxed 24 cents on the dollar for each additional dollar that they make. I want to say that again for clarity. Whatever your tax bracket that you're in, that's the tax you pay on extra dollars. It's not the total tax that you pay. This individual's paying a 17% overall tax rate on their taxable income after their deductions. And remember, they might have a significant amount of deductions that lower their taxable income. Again, their marginal rate is 24%. So every time they make an extra dollar, they pay 24 cents in taxes. Let's do something here. Let's say that instead of being single, this person got married, and they married someone who made the exact same amount of money. So we're going to double the money they made and hit enter. And what we're going to see happen is that these two tables, the single and the married filing jointly, have been set up to give, in essence, the same net effect. So instead of paying 24%, they each made an extra $2 total, and they paid 48 cents. And now their tax rate is 17%, regardless of whether they're single with an $82,501 income or married with twice of that income. And I've always found that to be interesting about the tax table. Someone put some thought into that. Let's take a look at what happens when you make a whole lot of money. So if you're single, everything above $500,000 gets taxed at 37%. And in order to make my table work, I just set this bottom number to be equal to whatever tax amount that you have. That's just a thing I did to make the table work. So let's say, for example, that you make $1 million a year. That's 1,000, that's 10,000, that's 100,000, that's $1 million. Let's hit enter. So here's someone who makes $1 million a year. If you are making $1 million a year, first of all, you're doing very well for yourself. You should pat yourself on the back and be proud. And a lot of people say, well, this is crazy because this person is now paying 33.57% of their income in taxes, and that's really a bad deal. But really, this person is keeping, around, paying a third of their income in taxes, so they're getting to keep, 2/3 of their income, and they're going to have well over $600,000 if they're single. Just to spend, and they're doing very well financially. They're not hurting. And my goal is for my students to one day get to the point where they're making some serious money. I would love for them all of my students to end up in that 37% tax bracket, because I promise you, life is better in the 37% tax bracket than it is in the 10% tax bracket. You've got more money to spend, and you're going to have a much higher quality of life. And yes, the consequence is that you've got to pay more taxes. That's just the way our society seems to be organized. So here we have an individual who's paying an overall tax rate of 33.57%. But the marginal tax rate is 37%. So basically everything from $500,000 up to $1 million, this person is paying 37% on that. And that means for everything from $500,000 to $1 million, they paid almost $200,000 in taxes, $185,000 in taxes. And so that's kind of how our tax system works. As you make more money, the tax burden that you have to pay is going to go up. That's going to be offset by the simple fact that as you make more money, you're going to have more opportunities for tax deductions, because what we're dealing with here is our income after any of our tax deductions. Some of those deductions play out once you get up into this kind of money, into that kind of $1 million range, but that's okay. It's just kind of the way things are. I'm not here to really debate whether things should be the way they are or should not. I'm just here to kind of explain how the tax system actually works, so that you can have knowledge and information. What I'm going to do next, and it's going to take a new video, I'm going to show you how I set up this spreadsheet so that you can make your own spreadsheet. Thank you very much for listening, and I hope that this has been informative.